high-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading webinar. Today we got a lot in store for you. Today we are currently live on dollar yen position here. I was just taking a look at that just now. I was taking a look at silver and gold as well. So you want to pull up the dollar yen chart over here. We're just a little bit in profit at the moment. I'm still monitoring this. I was looking at this bottom to confirm according to our smart money framework indicator. It still hasn't done that. If it did that, that would have been much better, stronger trade. I've put this on Telegram as well. At the moment, it just retraced back to trigger us in. So you can capture that on Telegram channel as well. So I'm going to be going through all of this in a short while. So what we usually do on our Wednesdays, when we go live on Master the Markets channel, is that one is that we take a look at basically live trade positions that are setting up at the moment. The second thing that we also then take a look at is basically a topic for the week, and today's topic is going to be on risk management. Okay, the number one rule that smart money traders follow, if I want to say it actually exactly, then you are looking at, let me just get that. Mastering risk management, a number one rule smart money traders follow. Okay, so this is what we'll be looking at today on the topic wise. Finally, then we update you on some events that are coming up from our side, as well as open up the floor for Q&A. Okay, this and more in this live trading webinar session. Right, traders, those of you who have joined in for the first time today, this is Tun Upon here, founder of Master the Markets Editors Conference and the Traders Open Day. So, going on into today's live trading webinar, where we take a look at live trades and then show you in real time how to apply the smart money framework as well as the volume on top of these trades. So I'm going to take a look at dollar yen very quickly on the trading view chart, because you know I've got all the indicators on there in terms of volume as well. So I'm just going to bring that up very quickly. And here, what we got. So I'm just going to load up our newer updated version of our smart money indicator as well. So let me just quickly do that over here. That should be this one here, isn't it? Yeah, so that should load up. Now, as I'm waiting for that to load up, I know more or less that that was where the confirmation happened on the 15-minute. Taking a look at the volume perspective, there was an increase in volume around here just after it confirming that buying pressure on that bottom there. The other thing also I do want to take a look at is also the VSA light dots here as well. So that's gray at the moment. So this still is fine. If it's green, is much more better. Just took out that phase, that last swing high, to turn it into a trend change. Okay, change of behavior, as they say. Now on the 1 hour time frame over here, I'm just going to take a look at this as well. This hasn't confirmed. Usually when we get successive confirmations on 15 and 1 hour, that is one of the best trades that we always have seen that comes across. Now, what are we actually doing with this smart money indicator framework that we actually have? I'll show you in a minute what was the rationale behind this. is that basically we got our tops and bottoms quantified, right? So if you take a look, the top is an orange arrow and a blue is basically a bottom, okay? Confirmation. Where does the confirmation happen? On this bar here, right? So this bar is confirming this bottom. So that's exactly what's happening over here, okay? So that's what we are looking at. Now, when I draw all of this, then I can quickly see also the trend, the phases, and I can align all of them together. That's what I'm going to show you in a minute. All the different factors that we take a look at before we align all of them for direction bias as well as for timing as well, okay? So I'm going to be showing you all of that very shortly. A couple of other trades that I am keeping an eye on for this US session that you guys can take a look at. Remember, I just want to also mention that over here we look at principles, don't we? In terms of what are the principles of the strategy entry that we are taking a look at. Now, these principles you can apply to any strategy, so you're not fixed to one particular strategy, okay? So you can use all of that as well. Some of for our clients, use that across different time frames, different strategies, 1 minute, 5 minute, and all of that. They do it much more longer from European session to the US session and all of that, okay? So you can take a look at all of that. Now, in terms of, I was taking a look at gold as well. Gold was a really good one. We were taking a look at an intraday trade, but end of day, it didn't really sell up this one, so we had to let that go. Silver did, according to our rules, on an end of day perspective. Over here, that was a bit in August. Those of you trading in August, you would have got that. Our clients who understand these open equity principle strategies, okay? So you'll be on that move at the moment. Now, in terms of today's trade, I was taking a look at this bar here. On gold, I didn't get a timing set up, but let me take a look over here on silver here. Again, you see traders, I'm not getting a retracement. If I was observing this much before, our setup would have come around here as it's coming back to test this area, right? These are our best setups. I mean, those for the future you can also take a look at. Is when something, a seller bar like this happens, confirms the top, but then immediately the next one you see goes up to tell you that this selling wasn't really real, it was a fake, okay, just to shake people out. And that's when you get this confirmation as well, you can go in. And only when everything aligns as well. This is a really good timing setup, okay? What I think most people don't really get it right is that they jump into trades without understanding the entire framework, okay? So that's on silver. So that's a really good one, but I'm not getting a hit on that. Let me see on the 1 hour, am I? I got that about 2 hours ago. That isn't the best one as well, okay? Our 12 o'clock range has been taken out. This is a good trade as well on silver. Those of you who are on by the screen, you would have been still sitting on this, okay, towards the range capture. Now, if I want to take a look in terms of range capture, 80% of that, that's 56 cents. That's what I'll be taking a look at from here. 56, somewhere around here, 41.17. Let me just put a green line. Let's see how it performs. Those of you on it, that's great. Trade manage it accordingly. As we always say, the money is not yours until you exit, right? Either when it hits your target or your trailing stop loss or your initial stop loss. That's the only way to exit, is it not, traders? Okay, good. So we got that over there. Let's see how that performs. I'll keep an eye on dollar yen. And those of you who are asking the questions about what is the rationale behind this, what are the terminologies behind this, I will be going through that in a minute and we'll see how it goes. So I'm using the objective over here towards the target of a range capture, okay, to take out that high. So we'll see how that goes. I'll take a look at time as well because the volume surge usually happens around US Open 2:30, 3 o'clock up to 4. Then after that, we might look to trail the stop tight as well, okay. So we'll keep an eye on that. Now, in terms of the rationale behind this, so let me give you a few pointers. I talked quite a little bit about the SMI framework, the smart money indicator, the tops and bottoms. I talked a little bit on the stretch principle. So where do you start? There's a lot of terminologies flying all over. So one of the places you can start off with, traders, I would say, to give you the reference links, because some of you are asking, 7 steps to CTP is the first one, okay? So take a look at that. CTP refers to consistent trading performance, just like what it's saying here in short form, that's CTP. So 7 steps to CTP.com, take a look at that. After you put in your details, click in the green button, then you're not a robot. Then after that, then you get the 7 videos sent to you, okay? So this will explain the entire framework. It's very powerful. This is how we got invited to many prestigious institutions, and also towards in front of millions of traders like Ninja Trader, who's got 1.5 million traders. They invited us 11, 12 times. It's on our YouTube channel as well. Take a look at it. Really good set of videos over there. Also, Society of Technical Analysis, after they saw all this, they invited us to do a talk, and after that, they invited us to lecture for their automated trading systems as well. So we've done all of that. So definitely do that. It's over 15 years of collated research, this thing. So highly recommend you can apply this on any strategy that you have. Okay, it's not rigid. Now you can apply this with volume, Fibonacci, stochastic, doesn't matter. So definitely watch this. This will give you a good idea. The other thing is also, those of you who want to get the indicators onto your screen, just like what I've got over here, right? So as I was showing it to you over here, with all the volume and all the smart money indicator and all of that all in one screen, you can always get it over here on the SMI and VSA page. You can go there and take a look at as well. Now, in terms of our channel, if you want to know when we are going live, it's youtube.com/master the markets, a straight way to just get to our channel. And then after you click the subscribe button, because some of you say that after you click the subscribe button, you don't get notifications, click on the all bell icon, okay? Now, after you've done all of that, then traders, one video that I will tell you guys to watch is, let me take a look over here. We had that before. Let me see. It was the must watch section. So if you take a look over here on the stretch principle here under the must watch, you can watch all of them, but the stretch principle one are here. So you can take a look at that. Right now we're putting it all together in one place so that you don't need to go to jump to here and there to watch this video. So watch that space. We'll put it all into one page called the free resources page, okay? So you can get that and you can watch that all at your own free time in one place, okay? So we'll do that. We're working on that. So we'll keep you updated once we get that ready. Now, the other thing is also to do a quick shout out to Trade Nation as well, who's helping us with the Telegram channel. And if you want to open up a broker account with them, you can also find the details in our Telegram channel as well. So other than that, the ETM Summit, once a year this happens, is coming in 10th and 11th of October. It's coming very soon. We're going to be very excited to see you guys. In-person tickets are available. We're just going to release very soon the online tickets as well. Those of you who can't travel all the way this time, you can then join us online as well, okay? Well, that will be all in your email. There's a few more tickets left for in-person, so do get hold of it. I'll talk a little bit about it later as well. It's all happening in London, overlooking the Thames River. Now, with that said, so now let me go and analyze this dollar yen trade. So as to give you the principles on why we took it. And then after that, then we'll also then take a look at the topic for today as well. Okay, so let me do that. Gold I was taking a look at as well, but we just didn't get a setup on that one. But okay, so let's go back to dollar yen here. It's still hovering around that area, so let's see how that goes. Now, over here, what I'm getting is on the daily time frame, we got an uptrend phase one over here, right? So this is how the structure helps us, because you see over here, traders, this bottom got confirmed by this bar. This is what we call a confirmation bar. After that, yes, we did have a big selling consolidation, but according to our framework, that never confirmed, right? That top never confirmed, okay? So when you draw your line diagram, it will look like this, right? It's still a straight line, even though when you take a look at that line, yes, individual bars is showing all of this, but according to our formulas, that top never got confirmed. So in this case, when I'm reading the trend and the phase, this is an uptrend, and phase-wise, as you know, in any trend, nothing moves in a straight line. You get one part of the swing, one part of the cycle, that swing, the bottom to top, which is in alignment with the trend, which we call the phase one. This one is the one that goes against you in the trend, okay? Profit taking happens, retracement, whatever you call it. We call it phase two. Now, after that phase two, if the trend holds in an uptrend basis, then your phase one comes back again. And then after that, it keeps repeating. Phase one, phase two, phase one, phase two. Okay? Right. So in that basis, this one is uptrend phase one, according to this framework. Okay? This is the good thing about the framework. It gives you a quantitative understanding. Okay? Now, after that, on the 4-hour, this is also a uptrend phase one. See, it's saying uptrend is all coded in. And then also this is a bottom to top. So at the moment, that's a phase one at the moment. Okay, so that's what we have written here as well. I'll show you that in the table in a short while. And then on the 1 hour, it still hasn't confirmed. It did do its best to go and confirm over there, but it didn't do it. So over here, it's still an uptrend phase two. Okay, this bottom is what we are looking to confirm. We entered it a bit earlier. I'll tell you why in terms of timing. Okay, so in terms of a line diagram, this is still an uptrend phase two at the moment. Okay, that's what we got. Just out of curiosity, just going to do a quick Fibonacci line here. That is a 50% line as well. So we'll see if it does bounce off from that area. Okay, but this is not the end or be all. And then after that, this I'm just doing the alignment first. Okay, so this is not where we take the trade. I'll break it down for you. Then after that, as you can see over here on the 15-minute traders, what you can then see over here is that we got a uptrend phase one, right? So there was a compression here. So this is the real good advantage of having the quantification of the tops and bottoms. Actually, this work was started back in the 1960s. That's why I gave you the reference link of the 7 steps to CTP, which you can go through in much more in detail. So over here, after that, then it comes down trend, comes back up. Then you see it made a lower high, and then it did a higher low, okay, a compression. But in that compression, when it confirms its bottom, it takes out the last high, and then it goes into an uptrend. Okay, these are really good setups. If that bottom holds, this will start to take off. Okay, and that's when we start to take a look at the volume around that area as well. Okay, so as of now, when you put all that together, all the time frames are saying uptrend, and on the 15-minute, that's an uptrend phase one, because it's an uptrend and it's a bottom to top move, and therefore it's in alignment. Okay, right? So it's going up and the trend is going up. So what we do then, traders, is we do this. Okay, after we got all these trends and phases, we put it into this table called the trend alignment table, right? Across the daily, the 4-hour, 1 hour, and 15-minute. As I said, you can apply this on any strategy. It doesn't matter. It's not rigid. Okay, but there's a way to construct your strategy as well, which I'll talk a little bit about later. But we got another set of videos, video courses on that as well that you can take a look at. Now, so in terms of here, you got your uptrend phase one line. In terms of, so take a look at first trend. Trend wise, all of them are uptrend. Direction wise, all of them are phase ones. Okay, all directions are lining except the 1 hour. Okay, so we want that 1 hour, even though it's uptrend phase two, we want that bottom to confirm. So this is what we are looking for. So we'll wait and see how that performs. Now, the other thing then we then take a look at is the stretch. Okay, the stretch principle. So if I go on to my other chart over here, so I will bring this back to daily time frame. And then over here on the 1 hour, if I take a look, at the moment, probably you can't see. Yeah, you can. Maybe I'll do it on 15 minutes, easier, right? So if you take a look, this green dotted lines here, right? Then you got an open dotted line, that's your red. This is what we call the stretch, okay? This is what your lower stretch line. This is your upper, this is your upper stretch line, okay? Right. Now you can see that, and that's your open price over here, okay? All this understanding, you can find it on the YouTube channel over here, okay? This is what I gave you the reference link just now, didn't I? In terms of here, there, the stretch principle over here, right? So you can take a look at that. That will explain everything to you in detail, okay? So when we take a look at that, we can see that it never took out the lower stretch. It only took out the upper stretch, right? Then retraced back to it. Big stretch breakout here, came back all the way down, and then come back up. But it still never took out the lower stretch, only the upper stretch only, okay? So what is all showing is there's a high chance for the BRO to form to the upside, okay? The bigger range from the open. When you take a look at a bar, I'm looking to capture the bigger range from the open, okay? That's what I am taking a look at from all of this. So stretch wise, it's also showing to the upside. In terms of range lines, it hasn't. Actually, it's a bit trapped, isn't it? That's your 8 o'clock one, and then that is your 12 o'clock bar. So between them, what we got is we got these range lines. If you look at the white ones, it hasn't taken out any of those range lines. Whichever range line that it does take from now on, it's a very high chance that it will continue in that direction, okay? So we'll wait and see how that plays out to be. Now, when I put all of this together here, okay, and later this one will be NA at the moment, right? Upper stretch has been taken out. Bro to ST, I'm going to just quickly take a look at that over here. Yeah, I would say it's more to the upside today because we got 79, we got 64, isn't it? I did take a look at this. Come on. Yeah, that was yesterday's one we need to take a look at. So yesterday's one was 94 pips is what we got. So 80% of that is about 75. There's still about 5 more to do. So wait and see how that does. But in terms of its range-wise, let me just quickly take a look at 65 to 7, isn't it? So yeah, so in Bro to ST ratio, it's also to the upside as well, okay? And in terms of previous daily high and low is another thing that we take a look at. Over here is taking out the previous daily high, you see, over here, right? So we then put that in here as well. And that's pretty much that. Now, what is the objective of doing all of this? So this is where, after you've collected all of this data, then you sit down with it. Now, the whole objective of this, collecting all of this together, is that we take a look at one which is called the direction bias, another thing which is also called the timing. Okay, so in terms of this, when I take a look at all of this together, it's usually an uptrend across most time frames. Upper stretch has been taken out. Range lines, no, is caught in between. Bro to ST is to the upside. Previous daily high has been to the upside. So about 7 of 8 of the factors I'm looking at is all pointing to the upside. So direction bias is quite clear here. I'll be taking to the long perspective, okay? Then after that, doesn't mean now you then jump into taking a trade, but now what you then do, traders, is that you now time yourself. When do you want to get into this trade is what you got to ask yourself. So when did we get into this trade? In terms of our rule objectives, I'm looking to capture this on the upside. So I went on the 15-minute following our smart money framework. I saw that there was a confirmation bar over here that happened, entered on a close of that, and a stop loss for that swing low. Now, after that particular point, what we'll also do then, if you take a look, that swing low that we entered on is also an outsider bar here. But after this point here, that interruption got cleared. After that point, then we will manage this on the 1 hour because I'm riding this towards a range. I just need a bit more wriggle room for it to move and as I manage the trade. Okay, so that's how we will be managing this trade, and we will use a few other factors. That's the whole understanding and basis behind this particular trade. Okay, that's how we took this trade. Now, gold is pretty similar. If you align all the time frames, you will start to see that it's towards the upside. The only thing is that when I logged in at about 1:45, I saw that around here I saw, but I didn't get an entry signal. I didn't get a top confirmation and a bottom confirmation. So I stayed back and not enter the trade. There was no trigger there. But those of you who understood all of this and who have been trading this for quite some time now with your own strategies, you would have probably come into it around here, okay, when you had a confirmation over here. So that was around 11:45. That would be about 12 o'clock our time. Okay, so this was the only one that I did see a setup on in terms of dollar yen. So we'll wait and see how that plans out to be. Okay, so I'll keep it on the other screen. I know there was quite a lot that we went through, but as I said, the first one to go through will be 7 steps to CTP. Take a look here. This should be the good starting point for you guys to start off with. And then after that, you can then go on to the other ones on the stretch principle and all of that, okay? Okay, good traders. So we got this one over here. Now let's swiftly move through to the topic for today, right? So the topic for today is on the risk management, right? So let me bring up, I also want to keep an eye on silver as well at the same time. Let's see how silver is doing. Silver is still quite strong. I'll put it on candlestick. I know some of you guys like candlesticks. You say it's a bit more clearer for you guys to see. So I'll keep it on that as well. Right, so this one here, we just did a recent update. I will put it here, then we can go through the topic for today. Okay, good. So the topic, as you can see, for today would be mastering risk management. The number one rule smart money traders follow. Okay, the number one rule that smart money traders follow based on risk management. So what is risk management anyway? For those of you newbies just joining in for today, risk management is basically what keeps you in the game for the long run. Okay, and why is risk management important? Because it makes you stay in the game so as to wait for the bigger trades, the bigger runners to come in to push your equity curve up to a new equity high. Okay, so the risk management is very important because you see, think about it, right? So if you got, let's say, a $2,000 account, a small account or like that, you're doing proof of concept or whatever it may be, or getting some confidence on it. Now, what you don't want to do is go and risk $1,000 on the first trade, isn't it, right? And then if that trade blows out, and then after that, then it's you've already lost half of your account. So you don't want to do that, right? So how should you risk manage? So that's the basis of risk management. Okay, the risk. How much are you looking to lose per trade? Okay, and because trading is a probability game, you should be thinking in terms of that. Not that when you put one trade, you're expecting and sweating profusely for it to win. No, that's not how it's done. Okay, because it's based on probabilities. You're not looking for a 100% reliable system. So an interesting fact for you is that 95% of traders do lose money, right? Overall, generally, but now it's improving. I guess some people are flat on their accounts or whatever. But the number one reason why they actually lose money is because of this, really, because of poor risk management. It's not even their strategy sometimes, it's this poor risk management. Now, more than the entry, I would say, listen, I mean, entry, I guess I always say this. I mean, entry, anybody can enter anywhere into the chart. But more importantly, I would always say is exits that are important because that determines your realized profit and loss. And the other thing also that is important is also your risk management. Okay, so even though a trade might look very good on paper, just like this dollar yen trade, right? Everything all ticks the checklist, or the volume is matching and everything, but you might still end up with a loss. And that's why you have to have your risk management, so that when you get the trade and it fits all your rules and it flies towards your target profits, then it moves the equity curve to a new high. Okay, so that's what we are really looking for. So this risk management is very, very critical. Right, so that's what we got over here on the what. Okay, so then after that, how do you actually do this? Now, most of you would have heard that the simple risk management rule. Okay, so we've explained what is risk management and why it's important. Now, how do you do it, right? Now, the simple risk management rule most of you would have heard about is the percentage risk management rule. So you always only risk a percentage of your account size. So for example, if you got 100,000 account, okay, so what you would do is maybe you allocate 1 to 2% of your account. In the beginning, for beginner traders, we always say 1%. So 1% means you only risk $1,000 on that trade. Now, those of you who are on a smaller account, so 1%, you can do that on a $2,000 account, that will be only $20. Okay, right? So that's the first point. Now, after you know how much you're looking to lose, afford to lose on that trade, then you got to then work backwards to find out, okay, how much volume should I buy in that trade? How much position size should I put? Should I put $1, $5 a point, or should I buy only point one contract, one lot? What should I be doing? So then you need to apply the formulas based on your trade parameters, your entry, your stop loss, is are the main things that you need to know. Okay, then you can then risk manage it accordingly. Now, those of you who've got integrated position size calculators, now there's a lot of calculators online. If you don't want to do this manually, it's a lot of work, and some of you might not be good with the don't like the math side of it and everything. You can always use a lot of calculators online, and also on MT5. Also, if you take a look, you will have position size calculators, right? So if I take a look over here, in terms of over here, you can apply this on anything. Once you put your entry, your stop, and everything, and then you say how much you want to risk. Let's say over here, you say that you want to risk, let's say, 1% is what we talked about in terms of percentage size. Then it would do it accordingly. See, it would tell you how much position size you need to buy 10 lots or 10 contracts, right? After you've put that, just to double check, once you get your orders onto the chart, you can also hover your mouse and see how much that will amount to as well, just to check that the position size calculator has done it correctly, because some position size calculators, the one contract or one lot value might be different, so you just got to double check that. Okay, so these are the things what I would say on how to do it. Now, a bit more advanced stuff that you can also take a look at when you're considering risk management and how to do it is that not only the percentage size as well of the risk management. So one way how to do it is you allocate a percentage, right? So it's called percentage risk management. Another way to do it is a fixed lot size risk management. Okay, but a fixed lot size, that means you can say that whatever instrument, I'm just going to buy one lot, one contract. Now, the downside and the good side about this is that the good side is on some instruments you will make so much more profit, and then on some instruments you will make so much more lesser, because the one lot, it differs to how much point value it creates per instrument according to the size of the lot. But on the other side, the downside is, if you think about in terms of risk, if your stop loss is too far away, then you're risking quite a lot through fixed risk management. Okay. Now, so how do you then balance that? So you can use a combination. Sometimes when the risk is too much, you use percentage risk management, or when it's all set and fixed and it's less than still 2% of your account size, you use your fixed lot size risk management. That's another way of combining it. Now, another way also, how do you decide your fixed lot size risk management? You have to look at your drawdown. So that's why some kind of testing is necessary. And then from the drawdowns, then you got to work backwards of your fixed lot size. And then you got to mentally prepare yourself. And then you got to then go into the trade. Good. So that's how I would look at it, traders, on a more detailed perspective. Of course, you got more questions on the exact details and everything. Definitely do email us on this as well. Okay. Now, even though you may do all of this, but if you don't know your probabilities, the fear will kick in, especially when the trade goes against you as well. Okay. So, for example, even on the dollar yen trade over here, you can see that even after you've done all of that, you can see on dollar yen, even when it goes against you as well. Okay, so you might think, oh no, did I get the trade wrong or whatsoever? But you've done your risk management, you've done all your setups correctly. That's fine. You just leave it as it's got to be. Okay, and you got to follow your rules because this is a probability game. Okay, that's what it's about. Right. So we got that one there. So in summary, what do we have actually? So in summary, we went through the one is what is risk management? Why is it important, right? And even knowing all of that, still fear then comes in. But then you got to understand it's a probability game. And number three is how to do it. So we took a look at percentage risk management. We also took a look at fixed lot size risk management and using a combination of that based on also your drawdowns, especially for your fixed lot size, fixed risk management, fixed lot size risk management. You got to take a look at and put more emphasis on your drawdown numbers. Okay, so good. So those are the things in terms of risk management. What I will tell you in terms of that. So do take away, play around with it, and see how that plays out. Okay. So now, in terms of this trade over here, let me see if we can do any kind of trade management on this. Now, if it does confirm here on the end of this 15-minute, but that there's still a possibility that you can retrace. Let me take a look on the 1 hour, which we are trade managing this on. That's an immediate thing, isn't it? I'll keep it there. I will reanalyze this at the end of this 5 minutes, right when the 15-minute closes, and also when the 1 hour bar closes as well. Okay, just to reevaluate and see. Okay, that's what we will take a look at. All right, so I'll keep that on here. And in terms of, I think we are nearing towards the, and in terms of, yes, another thing about the risk management is that one thing is that you can comment on the chat box. What kind of risk management are you guys using at the moment? Are you using percentage risk management? Are you doing fixed lot size risk management, or are you doing a combination of both? Okay. And then also those of you who want more insights like this on the topic, when we go through in detail and all that, remember to hit the subscribe button and also hit the all bell icon when we go live every Wednesday. Okay, good. So wait and see. Now, another thing that I also do want to make you all understand is, when things retrace and all of that like this is when the smart money indicator helps you also, because it tells you that this swing is not finished yet. So why should you get out? That top is still a potential top. It hasn't confirmed. As swing traders, if your strategy is based on swing trading, you're looking to ride that swing. Why should you get out if the top isn't confirmed? So it gives you absolute clarity, the framework. Okay, it's not the holy grail, but it gives you clarity. Okay, on whether you should stay in or not. And also, it also removes the fear part when this dance happens. Okay, when it goes against you, and then it comes back up again. Okay, but from a swing perspective, that swing hasn't ended. So why should we get out of that is what we should be looking at. And those of you, have been following us for quite some time, you will understand that even when you take a look at all our live streams over here, right, on our YouTube channel over here, over here, you will see that there's so many trades that we've taken here. Some would go straight to the stop, some would go so near. I remember there was a gold trade that we took, so go so near to the stop, missed it by 10 cents, and then it zoomed past up towards the target, right? You can watch it all over here. It's all stored here. Really amazing learning all over here. But those of you who have not watched the first videos, what I mentioned, I will highly recommend that you guys first watch 7 Steps to CTP. Okay, 7stepsctp.com, and what you should do over there, go through the videos. After you put in your details, name, email, and number if you want live trading updates as well, hit the green button And then after that, click on I'm Not a Robot. And then after that, then you can get the 7 videos, watch that, and also you'll get into our email database as well. So next time when we go live or do anything amazing, interesting events where we interview some really top traders, some market visits that we've interviewed like Tom Basso as well, and all of those things, you will get an email on it as well. So it's a great way. So not only these videos, you also get added to our email database as well. Whenever we do annual summit, some in-person meetings, you can all be stay updated on that. So that's the 7 videos over there that you can see at your own free time. 15 years of collected research. Highly recommend you guys to watch this. It will really boost your whole trading performance. Any strategy that you're doing, you can apply this because it's based on principles, okay? Right, so you got that one there. In terms of a YouTube channel, as I said, one of the things that you can take a look at is the stretch principle also. You can take a look at it over here. That was our live trading session 215 that we did. Stretch principle playlist, you can watch that. That's very good videos as well. That's how one of the biggest hedge fund traders actually build this fund on based on the stretch principle. Toby Crable is the name, is called Opening Range Breakout. Okay. So you can definitely take a look at that in terms of the stretch principle. The other thing also, just I want to mention, after you hit subscribe, if you want to get the live notifications when we go live, click on the all bell icon. Doesn't mean you need to watch it live at that moment, but you get a notification, you can then watch it later as well. It will come to your phone, okay? And you can watch the replay. All the replays are all kept immediately once we go offline on the live section here. So if you go on the live section, you can watch all the videos. Currently, we are live on this one here, okay? On the risk management side of things. So that's that one on the YouTube channel over here. And then you can also see some interviews if you want to take a look at as well. This interview with the market wizard Tom Basso. Some other great, amazing people we interview as well. Lawrence Benslop, who has got automated trading systems of 55 trading systems as well. So a lot of things over there you can watch at your own free time. But I would say after 7 steps to CTP, watch the stretch principle. The other thing is those of you who have watched all of this, maybe have not got the indicators onto your screens, just like what we got over here. What you can do is that you can get that onto your screens on the trading view, right? We currently have it on 3 platforms at the moment. We have it on TradingView, MetaTrader, as well as NinjaTrader as well. Okay, I know some of you guys watching are futures traders, so you can use that as well. And that's how, even on a YouTube channel, if you take a look, you can see all how it looks like on NinjaTrader. You can take a look at these videos over here. 11 videos we did. They kept inviting us with the content that we were providing, high quality content. And also the first one that we did with them went viral, right? Had about 25,000 views in 1 month as well. So you can watch all of that here under the playlist here and see how the indicator looks on NinjaTrader also. So good. So we got all of that. You got the page to get both the indicators, also the SMI and the VSA, the price and volume indicators. If you want to get the SMI alone as well, you can do that. If you got the VSA, you can contact us. We'll tell you how to get it. You can read through it and you can get both those indicators on there. In terms of our Telegram channel, I will give a shout out to Trade Nation as well. Thanks to them, we got the Telegram channel. And also, if you want to open up a broker account with them as well, you can do so, right? And they're good spreads and everything. You can check them out and you can open them up at your own time. Right. The last thing was the ETM Summit, right? The ETM Summit happens once a year. Really great opportunity for you to meet other like-minded professional traders. Over here, what do we actually do? We look at research updates for the year. We will be doing some live trading as well. And then we'll also be covering some of the strategies that we do, as well as how to apply them in your own strategies as well. Okay, we'll go through some strategy construction principles as well. So that's what's happening on the 10th and 11th of October. You want to have a read at it. Me and Gavin will be there. We'll be talking on price and volume. You can take a look at why it was created, what we'll be covering over there. So really great event to attend. Happens once a year. This time it's happening on the 10th and 11th of October. And it's going to be happening in Westminster, London, okay, in central London. It's a nice venue. It's the Park Plaza Hotel, Westminster, overlooking the Thames River. Over the 2 days, we will provide lunch And the first evening we'll have a dinner as well. So that'll be a great opportunity to network further and also discuss trading materials as well. Okay, so really great event. So I hope to see most of you there, and it'll be a nice way to finish the year and to get recharged as well and totally energized and inspired. Okay, good. So that's on the ETM annual summit. I guess I've covered most of it. What I'm going to then leave you guys with, I'm just going to take a look on dollar yen. That's bounced back up, still holding that bottom over there. Traders is what I can see. This one is what I am taking a look at, right? So it's holding that bottom. The volume is supporting. Let me see. Yeah, the volume is supporting on that area there. I'll confirm that on TradingView as well. Over here on the 15 minutes, we got the stretch indicator on TradingView as well. For those of you guys who are interested, we can pass that on to you. Yeah, I can see a good volume spike over here, supporting this area, right? And also supporting this bottom at the moment. So we'll hold on to this trade. Everything is confirming in our side. It's a matter of patience and also how we trade manage and risk manage this trade also as well. So you can see from the swing perspective, this is where we got confirmed of that swing. Bit of consolidation, nice bounce, supported by some volume here. And so we'll see whether it gives it the strength to go towards fulfilling its range for today and taking out that high. So we'll keep an eye on that. I guess traders, that's pretty much that from me. And those of you kept asking about what are the first steps, what we should do, I would always say check out 7 steps to ctp.com first. Okay. Now, I think the main questions that really came was where should we start? How should we analyze all of this? And I've given you all the reference links. Traders, if there's not anything else much, I'll see most of you at the ETM Annual Summit. Do check that out as well. And other than that, check out with 7 steps to CTP. I'll leave you guys with the Annual Summit page over here. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.